It's Trading Tip Tuesday, and I realized I had an epiphany. I hadn't talked about chart patterns yet. Behind the cloud, probably the most profitable piece of free alpha TA I can provide to the community, free of service. Like, share, subscribe, turn on the notification bell. So most of this stuff is lifted from my crypto chart pattern compendium article on Medium. I'll link that in the video description below as well. But if you are a reader, lots of discussion from myself regarding the patterns. For the most part, all of these patterns are extremely obvious, occur extremely frequently in crypto or any market on all time frames. As usual, if they're on a high time frame, if we have a 90-day inverted head and shoulders, for example, my probability and conviction that that pattern is real goes up exponentially. So first thing you got to do is recognize the pattern, and there are maybe 12 of them. Some of them are just opposites of themselves, so they're really not that hard to remember. If you're new to this sort of thing, I advise just drawing them out or printing this sheet or something like this sheet, just putting it up on your wall or your screen or whatever, just so you can get the pattern matcher in your head, and you can say to yourself, what does this look like? What should I be doing here? What is the behavior of the market? What is the market trying to tell me? And I don't really care how often they work. You're welcome to back test all of these. I'm not going to do that for you. But for me, it's about recognizing the pattern. What is the duration? What is the length? What does the volume look like? I'll talk about that. And then from there, the reason these work so well is because they give you entry, exit, stop loss every single time. So you don't have to think about it. As long as you can become comfortable with the subjectivity of identifying the patterns, because they're not always perfect, and there are going to be people in the patterns must be perfect camp, and I'm in the sliding scale camp where if they're perfect, I'm more sure. If they're sloppy, I'm less sure. And you should move your leverage, your sizing, all of that should be relative to your conviction on what they look like. As you use these more and more, you'll be more sure on what you're looking for and how sure you should be on some of this stuff. So let's talk about a few of them. Now, there are ones that I talk about a lot just because they happen all the time, like head and shoulders. People like to make fun of me, which is fine. I don't really care. But they happen so often. Even looking at this chart today of BTC, you can see these fractals just trying to happen over and over and over. And you can see how they fail and why they fail. Shoulder, head, shoulder, shoulder, head, shoulder, shoulder, head, shoulder. This one worked-ish. Now we have this potential for a larger something, right? Like you can see shoulder, head, shoulder, maybe, whatever. Even if this is sloppy, this is the sloppy side of the spectrum. Even if this is sloppy and doesn't look good or convincing, I set my lens for my head. If we're trying to make reversal patterns, we're probably not going to keep dropping. If all that fails, then we keep dropping. It's if this, then that. Right now, we're still trying to get our footing in my head based on this, even though none of this is perfect. Not going to hear this in no textbook. Even though none of this is perfect, and I wouldn't trade it necessarily as a head and shoulders, inverted head and shoulders. You can say to yourself, okay, we have this declining volume profile. Again, not perfect. We have these fractals over and over and over again at all sorts of time frames. Again, not perfect. And using it with the cloud, especially, we can see, oh, okay, this might be a mess of a choppy mess. But, if we're above 36.2 on the cloud, then it's go long signal. This just happens to be the hourly. But this is the type of process you can use for non-convincing chart patterns. All right, let's just go through a few of them. Some of the more famous ones, as I like to think of them in my head, where I know where I was. I can tell my grandchildren what happened throughout that 250-day ascending triangle. So this was back in 2015, 2016. And something else you'll notice for a lot of these patterns, if they have a flat line, price wants to go through that line. So, if you want to break down the chart, the patterns in your head, you can say if there's a horizontal, price is going to want to go to the other side of that. Then you can say, is there a diag here? Is there another horizontal there? What does volume look like? Is volume descending? So that's all part of the recognition. Then once you recognize it, you can use fib extensions, 1618. This is the measured move. You can use fib extensions to determine exit of the trade. So entry is here, and I think of it as a stop limit entry, which is difficult in crypto because oftentimes once it passes through a horizontal, it just goes and you don't have a chance to actually enter into a position there on a stop limit order. But what a stop limit will do will trigger an entry for you in the order book, a limit order, once price is above 475 in this case. So you set a stop limit at 475, you would put a limit order at wherever, 475.1 or something, and then you're in. Ideally, you have some sort of stop market or just market order when we break these patterns. You're watching them. I mean, this is a multi-month pattern that everybody and their mother was watching at the time. So you're not going to, you shouldn't accidentally miss this. You know, if this happens, there's usually a market-wide reaction because everybody's watching it. That's the other thing about these chart patterns. Call them voodoo, call them crazy mess, don't work, don't care. The point is everybody's watching the same thing. The other thing about this one specifically, your stop loss is the lower low of the pattern. So some people might look at this and say, oh, it broke the diag, you know, it's done. No. You know, it's still on the table. It made a lower low. It looks less convincing at that point. But when that happens, you're not in the trade yet, right? So just let it do its thing. You're in the trade when we break this horizontal. So once it breaks the horizontal, then your stop loss is obvious at 430 in this case. Let's look at another one. This is a bilateral symmetrical triangle. We're kind of setting ourselves up for something like this. And you'll see this in crypto frequently because we love to just moon rocket up and then chop around for a month or two. And then all of a sudden, some catalyst will just dump it. This was the Bitfinex hack in this case, but this was in 2017, 2018, whatever, 2017. But as I see this forming, I'm thinking, okay, this is 50-50. You know, this isn't saying it can go up or down. It's saying be ready for either direction because there isn't a clear bias here. When you get something like this, there's a clear bias. The market's waiting for this horizontal to break. When you get something like this, it's 50-50. Some people will tell you if it forms through a previous trend, it's continuation, and to not think of it as reversal bias, but either way, you know, in your head, it should be 50-50. So that's symmetrical triangle. Another symmetrical triangle, same thing. Again, descending volume profile. These don't always look perfect, but it gave you a really nice break here on that entry, and it reached the measured move 1618, sorry. Well, in this case, it was both actually. So the measured move for these are the length of the pattern. For the most part, it's any pattern, and then just projected down from the breakdown point. Again, another ascending triangle. Crypto loves its ascending triangles. I don't know why, it just does. Descending volume profile, this is ETH in 2017. And something else you'll see often is a retest of the breakout. You don't always see that, but this gave you two more entries before it took off to its final destination. And for alts specifically, they love to overshoot their targets beyond the 1618, beyond the measured move. That's why you'll frequently see me adding like the 2618 or the 3618. ETH especially, Link loves to do that as well. Because there's so much FOMO, there's not enough float on exchanges. There's all sorts of reasons why this happens, but again, this is a multi-month ascending triangle. Something else you'll see in these ascending triangles, you'll see hints of other patterns as well. Here's an Adam and Eve. So an Adam and Eve is a double bottom, a V, and a U. On low time frames, that's a reversal. Here's another V, here's another U. Hey, that fits within the thing. Guess what? This whole thing is a giant V and a U. So once you see this stuff, you'll start to see more and more of it. Is it pareidolia? Again, I don't care. You know, you do you, right? I trade my book, you trade your book. But seeing all these reversals gives me additional confidence that this ascending triangle is going to behave as expected and have this sort of bullish bias with it. And then with these breakouts, you'll start to see, you know, additional patterns. Like here, there's a flag pennant thing that broke up. So you'll start to see more and more of this stuff and recognize it. Most of the time, fairly obvious. Here's Ripple back in the day. Several descending volume profiles. Again, it overshoots its 1618 by a lot. Goes to Big Mac parity, somewhere around 320, whatever the all-time high is. And you can argue whether or not this is a symmetrical or descending triangle, whatever. The point is, there's clearly consolidation here. That's the other thing. These patterns represent consolidation before price making a final decision. And it exceeded the measured move, exceeded the 1618. Here's a good stellar failure for continuation. So this was on a 2-day chart a long time ago, December 2018. And a lot of times for alts, I go up the time frames because they're so noisy. I mean, just looking at this at like the 12-hour or less, you're not going to necessarily be able to see that, oh, this is just a giant consolidation this entire time. It looks messy on low time frames, but you zoom out and then you start to see it. So everybody's watching these diags, guaranteed. And once we break a diag, once we break lower lows, that's it. That's all she wrote. And, it's wherever it is now, somewhere in the gutter. But stuff like this helps you make pretty obvious trading decisions. So here's a falling wedge. You'll see me talk about these frequently as well. Again, descending volume profile, not super pretty, but it's there. This is a bullish divergence as well because you're getting lower lows in price on higher RSI. So you get your expected reversal there. You'll see me pointing these out very frequently. For some reason in crypto, rising wedges tend to be more bullish than they should be, in that they typically break up. Same thing with falling wedges, honestly. Like, these aren't perfect patterns, but your bias should not be continuation seeing this, especially with a multi-month bullish divergence. This says as price goes lower and lower and lower, there's less and less bearish momentum. Bearish momentum is weakening, sellers are dying off, and at that point, up becomes the path of least resistance. And you'll see these all over all different time frames. Here's another one. BTC, falling wedge, bull divergence, descending volume profile. I mean, this is such a great pattern because it's coming off of the massive down move here. And you see the sellers just coming off to nothing. And you get your reversal move. Another falling wedge, again, 4 hour. You'll see so this is the hourly. These are going to be on every time frame. If price moves a ton really quickly, you're going to have to move down time frames. If you are stuck in consolidation, you're going to have to move up time frames. Again, bullish divergence, falling wedge. For these, the take profit's usually just the top of the wedge. Sometimes you'll see really crazy looking stuff like this, where this falling wedge is like segmented, broke up. Again, way past any target you'd ever measure or think about measuring, just basically retested the highs here. So one way to actually trade this is to put orders just staggered all the way up until you're sure that the move is done. Even here, I tend to give this stuff a lot of time, let the runners run, especially once it gets past the top of the falling wedge, then it just has a chance to, do anything really. Here's a falling wedge again. This eventually worked out, I think. Yeah. So you get the point. Pretty easy to identify. This one's more of a channel than a wedge, but nonetheless, you shouldn't be looking at these patterns. Even if you don't trade them, you shouldn't be looking at them saying, okay, this looks bullish here. No, that shouldn't be your mindset or bias. Again, rising wedge, descending volume profile, breaks down. Here's an Adam and Eve, failed. So your stop loss for this Adam and Eve would be either this low or this low. And man, Adam and Eve is another one that happens just all the time. It's so obvious because it's a V, it's a U. Typically the Adam comes way down. The Eve kind of comes back to the wicks or the body of the candles. So you see that one over and over again. Here's my favorite, the head and shoulders. This is a multi-shouldered head and shoulder. You can get a multi-headed, multi-shouldered head and shoulder. You can get a multi-headed head and shoulders. You can get all sorts of variations of this. You can get diagonal necklines. You can get imperfect shoulders. It's just going to be a hot mess. Just the entire spectrum. And again, your conviction of that pattern working out should match how well that fits. So if it, like this one, not perfect, but it's not there, I can't say that this is definitely not a head and shoulders, right? So again, you can't look at this and say, yeah, this is going to break up. Or if I'm in a long and I see this, I can't just say, yeah, I have tons of hopium that this is going to break up, because that's not how it works. The point of being able to identify this is to gauge a bias in the market. Here's a multi-shouldered, this should be an H here. Multi-shouldered head and shoulders, volume's imperfect, whatever, doesn't matter, still hits its target. Sometimes you'll get imperfect shoulder length or duration, it'll be lopsided, doesn't matter. still popped up. I'm just showing you these to help get an idea in your head of how messy these can be. Again, these shoulders aren't really equal, but you never actually got in this trade because it never broke above the neckline. So you don't even get stopped out here because it never made higher highs. Same thing, head and shoulders. I mean, you see this over and over and over so many times. At some point, even the non-believers have to say, okay, maybe I should figure out what these things are all about, right? And your diagonal ones are a bit trickier, but again, they work out usually. I don't think this one actually did, but descending volume profile. Really, if I see the descending volume profile, then I'm thinking, okay, there's got to be something there. There's got to be something there. Here's an Adam and Eve. The other thing I'll say about these is there are expected places you'll see these patterns. So you expect to see, double tops at the top, right? Head and shoulders at a local top, inverted head and shoulders at a local bottom. If those patterns aren't exactly where they're expected to be, again, it doesn't mean they're not there. It just means the probability of them working out is probably a little less than if this was, a mega local bottom. It still looks good to me, obviously, but you can even see an Adam and Eve in here. Adam, Eve, Adam, Eve. Maybe I'm crazy. Maybe I'm the crazy one. Here's the LX, Ethereum. This was probably one of my favorites because it's so painfully obvious. I don't even think I was looking at Ethereum in 2016, but when Ethereum was at like $7 to $10, and obviously this way outperformed. This was the bottom of the run to all-time highs at that time, and the expectation shouldn't be that prices are going to go to all-time highs when a pattern is successful, but you just never know. Sometimes there's even an ascending triangle here as well in low time frames. Once you start to see these things, you'll just see them over and over and over. Here's ADA, and again, it just overshoots everything, any expectation, any local high previously. One of the cleanest probably ever, that you'll see right here. Volume was just kind of meh, but it still happened. Here's a good example of sort of a failure. Fairly confident Adam and Eve broke the neckline, or horizontal in this case. You shouldn't really call patterns that aren't head and shoulders neckline anything, but this one I don't think worked out. So you'll get a gauge for when these things are done and ready. The last one I'll mention, there's cup and handles, inverted cup and handles. All these can sort of be inverse. Here's an inverted Adam and Eve. This is BNB BTC. So one of the best examples of a diamond top, diamond would be a reversal pattern, was on BNB BTC in 2019. And this one's just so violent and so perfect. You got to question whether or not it was painted here for you on purpose. But how these diamonds work is it's super volatile in the middle, spans, several diags, makes higher highs, makes lower lows, does all that stuff, and then comes right back to some median point. And the measured move is the width of the pattern. Then you can fib it out, and you can see it hit this in stages. First it hit the measured move, then it eventually hit the 1618. Here's another messy head and shoulders here. It made all this stuff and then just sort of made a descending triangle. Didn't really hit any marks or targets, but again, you can't look at this and say, yeah, this is bullish. So it started identifying, if you're new to chart patterns, start identifying what you think is there, look for the descending volume profile, mark it up on the chart, save all these over a month. You'll understand which ones are more effective, more probable, better at identifying bias, which ones aren't. And I can guarantee you that having this in your tool belt as a trader will be highly effective.